And we're going to be hearing from R2's expert, Meggyn, and she's going to be talking to you about PI and professions. And she's going to be talking about some of the different sectors, some of the challenges we're facing now as an industry and as brokers. And I really hope that you're going to learn something. And as I said, we'd really love it if you ask some challenging and even some stupid questions, because those are often the good questions. So just before we start, if I could ask you all to turn off your videos. If we can see you, it would be great if you could turn off your videos and your microphones. We would love to hear from you during the conversation or afterwards on the message group. If you ask any questions, we will make sure to ask Meggyn, and we'd love to have a chat afterwards if you have any questions that you want to ask on your microphone. So on that note, I'm going to hand over to R2's PI and professions expert. I think the last time you heard Meggyn on one of these video calls, she was an expert in coffee, and she was talking to us about how to make or pour or brew the perfect cup of coffee. But as a woman, she is a woman of many talents, and she happens to be really talented as an expert in profession. So Meggyn, over to you, and I really hope you're going to enjoy this conversation, and we'll have a couple of questions afterwards. And remember that there are a couple of bottles of wine for good questions for Meggyn. Thank you so much, and over to you, Meggyn. Meggyn, I think you're on mute.
Right, can everybody hear me? Cool.
Yes, we're good.
Can you see my screen, Just?
Yes, we're good. You're looking good. Your screen's looking
Perfect. Good. Good. Okay. So I'm sorry, one of my expertise is not anything technical, and Zoom is not a huge fan of me yet. So we're working on it, but bear with me. So welcome everybody. Thanks for joining us. What I want to chat about today is not to turn this into a product training. We can do that separately for you, so give us a call. But today I really want to talk about professions and how we move to having expert conversations around specifically professional indemnity. And I think it's a tough one because we sit in the position where we have a lot of clients, we talk to them about commercial insurances, we talk to them about their assets, but we're sometimes a little bit nervous to delve into areas that we are not comfortable with as brokers, or you are not comfortable with as brokers. So it's really important that we have a little chat. I'm going to talk a little bit about the market. So thank you, Gordon, and Just for introing the hard market for me. Talk a little bit about what we're seeing in the market, because it is important for context. But then what I really want to delve into is talking a little bit about professions themselves, so that we can really get you to talking points that you can raise with your clients. And that's a really important part of our conversation today. So please do feel free to add on some questions. We'll answer them at the end, just so that it's a little bit smoother. And we'll get to those in a moment. So what I want to talk about first is just to have a look at something that is extremely relevant, and something we've been indicating or saying was going to happen for quite some time, and finally it has, is that the PR market is very much cyclical. It works in cycles, it always has, and probably for the last 12 to 15 years, we have seen what we all know as a soft market, and we've been saying it for as long as I've been in insurance, is that we've been going through a soft market cycle. And essentially that is lots of competition in the market, really good risk profiles for clients, not a lot of claims, and so we see a lot of entrants into the market. But what's going to happen at some point, and it has to happen, is because we are not necessarily writing the premiums where they should be for a sustainable account, because we're taking on a lot, and because there's so much competition in the market, we start to see those premiums dive, but at some point the claims will hit. And we've absolutely seen this, and as was very correctly said just previously, is that we very much do follow the London markets. And we can see that as a trend and a pattern throughout the history of insurance in South Africa. We sometimes trail by a few months, but sometimes we trail by a few years. And I'll talk to that in a minute. So what you can see here, that red part, is really where we are in the cycle right now. We have seen the market, the defining losses coming in. We've seen some significant losses in the London markets, and we've started to see that reduced underwriting capacity hit the reduction of that market competition, and that starts to result in increased rates, narrowing of coverage, and less capacity being available. And if any of you are broking some big accounts around July, trying to find capacity in the markets for a PR placement. So we're definitely in the cycle, but the good news is we do come out of the cycle at some point. How long? I can't tell you. I remember as a broker sitting many a time saying, we're in a soft market, but it will harden. And I think I said that for 8 years running, and we never saw it. And then all of a sudden, here we are in a much harder market than we've ever experienced before. So if we have a look, really what's happened within the PR space, 2017, and this is specifically within the Lloyd's environment, because that is what we are most directly impacted by. We saw around 272 million euros in PR claims hit in 2017, which is really that sort of collective catastrophic event that pushes us into that hard market. So it's always very tough, because I think as brokers, your clients are saying, show us this hard market, show us the evidence of it. And really there it is, it sits very firmly in the London market. And then it does trail down across the world, and it impacts the rest of the world as well. So we definitely start to see that impacting ourselves. 2018 came along, Lloyd's took the decision that they needed to undergo an enormous review of all of their syndicates, because when they did so, their performance management directive, they rated PR as the second least profitable class at Lloyd's. And so that saw 9 Lloyd's syndicates shutting down entirely and closing up shop. And what we had, and in terms of the remaining capacity, we saw highly restricted capacity within the remaining markets. So the challenge with that is that the capacity was restricted to such an extent that if any of those syndicates fill up their slips, by the time they get to the end of the year, if their slips are filled, they can't offer capacity to renewals. And so you're finding brokers having an even bigger challenge in finding capacity there. I think we're in a very privileged position in South Africa, and I think something that we sometimes take for granted in the specialist space, because we're not always aware of how strict and how stringent it has become within the Lloyd's environment. But within South Africa, we're very privileged because we actually have an enormous amount of capacity, many insurers that entered that market because of the soft market. And so we have survived this hard market to some extent without losing extreme amounts of capacity. But a couple of things that really have hit, and the net effect of a hard market are the following, and this is effective around the world. Premiums go up, deductibles go up, and the claims go up. What comes down is capacity, the coverage provided, as well as the risk appetite. And so we become a lot more strict around the type of risks that we're willing to take on. So it's incredibly important. Your job as a broker right now becomes even more important in terms of your broking capacity and how you broker accounts to the underwriters. So if we have a look in terms of those losses that Lloyd's made, around 62% of Lloyd's syndicates that write and they classify as non-US PI insurance markets and US, 62% of the non-US insurance made an aggregate loss over the last 6 years. And so that is what really makes it the least profitable class at Lloyd's, or second least at least at the moment. So we're sitting in this space right now, and it impacts us. And it has this knock-on effect to us. And now more than ever, your job as broker to have the right conversations with your client come into play. So yes, one part of that is to understand the product, but I think more important right now is to understand your client. And we have to get to that point. So very broadly, the cover is a breach of professional duty, whether that arises out of contract or something we call delict, which is really the fancy Latin term for the area of law that manages third-party claims. It covers negligent misstatement, misrepresentation, libel, slander or defamation, intellectual property rights infringement, breach of confidentiality, employee dishonesty, and then like any good old PR policy, there's a whole bunch of extensions that we add on, and that's really added on to make sure that we are accommodating all the weird and wonderful ways that your clients are engaging with the third parties that they're involved with. So the cover is there, the market is there, but let's stop talking about that insurance and let's start talking about your clients. So first, what I want to talk about is firstly to understand that we have an enormous amount of professions. At last count, we have around 146 different professions that we could possibly provide PI policies to. And that's enormous. It's far beyond the traditional professions that we're used to seeing. And I suppose the question for you is always, who needs PI insurance and when? And we cover that in our product training, but that's really anybody giving advice or providing a professional service to somebody. And that doesn't need to be somebody who has the traditional degree or professional qualification that they may have gotten. So generally, just to name a few, we have a lot of miscellaneous, weird and wonderful, strange requests that we get. So we are always open to any sort of requests that you have for clients who require or are needing PI insurance. But we look at management consultants, multimedia outsourcing, the telecommunications world. Tech PI is very big at the moment and goes hand in hand with our cyber cover. Accountants, auditors, tax professionals, all of these people need cover. But the two professions as a group I'm going to talk about most today because we're seeing the most interest in these two. One is legal. So anybody in that legal framework, whether it's a legal advisor, an attorney, or an advocate, and the other is the built environment, which is very broadly the term for anybody who's an engineer, architect, quantity surveyor, and the like. So we're going to talk about those two in more detail. But we always get asked about our risk appetite. So in red there, I've highlighted for you a couple of the areas that we're a little nervous of and do tend to stay away from at this point of time. The reasons are relatively straightforward. The risk appetite we have for them is not great in light of the claims, as well as in some cases, we have concerns around the risk management that is involved in that type of profession, or should I say the lack of it. So aviation, anything aviation related, very specific, very high risk part of the industry. Broker PI, unfortunately, we love you guys dearly, but very high risk area. I want to just stop there for a moment on brokers and just redeem myself on this one before you all don't like us anymore. Brokers, I think, have a very tough job. Brokers are required, particularly in our environment these days, to be a jack of all trades. You are required to know an enormous amount of products and everything that relates to your clients, and then equally to fully understand your clients, which is an incredibly challenging job. And I think that is really what has created an environment where brokers are such high risk and are being put in the position where there are a number of claims against. Easy target to go against your broker when something goes wrong with your cover. And I think more and more so brokers are going to start seeing a lot of pressure coming onto them around our COVID and lockdown situation. So broker PI is something that we are nervous of. Freight forwarding, actuaries, debt counselors, labor brokers, liquidators, business rescue practitioners, and then we no longer write single project PI either due to the risk profile. So those are just some of the very general categories of clients that we see in our space. But let's talk a little bit more specifically about those two that I mentioned. One is the legal environment. So when you have an attorney approach you, an advocate, or any legal professional, I think it's just important to understand their environment. Understand where do they come in, what sort of legal framework have they got within their operating environment, and what is the statutory obligation that they have in place for themselves. So first of all, most legal practitioners now, there's a new Legal Practitioners Act in place. The Legal Practitioners Council is the body, the statutory body that has oversight over all legal professionals. They then are mandated to put in place something called the Legal Practitioners Indemnity Insurance Fund, which is really just a base primary layer of cover that is afforded to all attorneys and now advocates. The requirement for cover under the primary of the LPWIF is that they hold a fidelity fund certificate. So the cover there specifically is derived from the fact that they hold other people's money in trust to do transfers, etc. So that is generally the requirement in terms of having any sort of recourse to the LPWIF, is that they must hold a fidelity fund certificate. And so we sit in that same framework, that is the absolute basic of what those legal professionals need to hold. The primary cover there is actually quite important for yourself as a broker to understand as well, because it is relatively limited. There is a lot of misunderstanding about what that policy is actually intended to cover. And sometimes, in fact, in many instances, it is considered that because the attorney has LPWIF cover, they don't need any additional insurance. And I think that's quite a frightening stance. And from our last assessment of it, only around 10 to 15% of attorneys and all attorneys in the country actually take out top-up insurance to the primary cover that they already enjoy. That primary level of cover, the limit that is applicable is determined by the number of principals in the firm. So a smaller firm would only enjoy around 1.5 million rands worth of cover, while a large firm, and now we're talking about the big 5 or big 10 even, that are within South African borders, only enjoy 3.125 million in the aggregate on an annual basis. So as you can see, just from those limits that are in place, that is hopelessly inadequate when we start to think about the types of claims that come against attorneys, and particularly large firms that may be doing mergers and acquisitions or large conveyancing transactions. In terms of that LPWIF cover as well, it is and has become, particularly since 2017, when the wording was adjusted, very strictly PI cover only. There has always been this misnomer that the LPWIF, because it is derived from trust money and from the interest on trust money, that it covers misappropriation of trust money. So if funds are stolen from those accounts, you cannot claim directly from the LPWIF for that loss. They strictly only cover PI type claims. What they are is a fund of last resort on misappropriation of trust funds. So what happens is that the client who has lost the money has to take all necessary steps to try and recover the money from the attorney himself before the client can approach the LPWIF to recover that money that he has lost. So it does not cover for the attorneys themselves and any loss they have suffered, and they will still be out of pocket in that event. So it's very important that the attorneys appreciate the level and the limitations of the cover under the LPWIF. So if you have attorney clients, that's the kind of conversation you can be having with them, is around, are they comfortable with their level of primary cover, and do they have a top-up program in place to make sure that anything else outside of that cover is actually picked up. So it's one thing to increase their level of cover on a PI claim, but it's also to pick up those elements that are not covered. The other very big exclusion on the LPWIF master policy is the exclusion of any cyber losses. Now, cyber, in particularly the legal environment, has, I think, gone a little bit out of hand and really become quite a large claim area. Legal firms are under attack constantly from a cyber perspective, and I think something of great concern and something you can have a really good conversation with your client about in terms of these risks. But it's important to understand that the LPWIF, the minute they see anything that could be cyber related, an email hack, any of the terminology that you would generally see the minute that you have any cyber related losses, they kick out that claim. So what happens is that your attorneys then sit without any cover in place for those losses, and specifically around things like misappropriation of trust funds, as well as fidelity guarantee covers that would cover their business account money. So just to be clear on those, there are 2 elements within the attorney's framework. There's obviously their professional negligence, but most attorney firms also keep 2 different trust accounts. They have a trust account in place for third-party money, so for conveyancing and large mergers and acquisition transactions. They would put that money in a separate trust to earn interest for their clients, and then they have their actual business account. Misappropriation of trust money does not cover any theft of business account money or of own money. So again, really important to have a conversation with your client about how do they manage their money matters, how do they operate transfers, what sort of limits do they have on transfers, and are they adequately insured when it comes to theft of money? Because more and more we're seeing this as a really huge and prevalent type of claim that we're seeing in the attorney's environment is theft of funds. We are seeing most certainly during this time and moving forward an increased demand for legal services. And I think like many services, unfortunately, they are becoming more and more commoditized, but that doesn't change the fact that attorneys are doing more and more, irrespective of what they're charging. And so that risk still remains there. So incredibly important to understand that there is a huge demand for legal services. There always will be, and that your clients need the adequate protection to make sure that the job they're doing is sufficiently covered. Then, of course, COVID is always a concern right now, and specifically lockdown and how that impacts on a professional environment. So within the legal framework, the Legal Practitioners Council and the statutory bodies that surround them have been very proactive and quite quick to act in terms of setting out regulations and guidelines as to how the legal profession will continue to function through lockdown. So specifically what they've spoken about is things like when courts stay open, what matters can be seen, what are seen as urgent matters, and so all of those elements are taken care of. I think the huge concern for anybody in the legal environment is prescription of matters and worrying and having concerns over not being able to have their matters heard in this time of lockdown. And so there is a prescribed list of what matters are considered to be urgent and necessary and what are not, and they are bound to those. And so I think what becomes necessary for your legal clients right now is to be having really good in terms of timeframes and
Hi, Megs, we lost you there for a few seconds.
Sorry, are we back?
Yes, you're back.
Sorry, guys, I told you Zoom does not like me.
There you go. You're
cool bananas. We're back. Okay. So within the legal framework, the claims trends that we are still seeing, and these are probably the most prevalent and most common, are still prescription of road accident fund claims, which is quite surprising because all members of the LPWIF have access to something we call the risk alert, which is a prescription risk alert, and it is a service that they can register their matters on, and it will actually send them alerts as to when those matters are going to prescribe so that they don't have that risk. So the Legal Professions Council has actually taken a lot of steps in terms of risk management to aid attorneys because of the prevalence of these types of claims. Yet many people are still not making use of services that are available like that. Then the other area of grave concern is the conveyancing space. And I think the most concerning here is not necessarily errors in conveyancing transactions themselves, but in fact, the propensity to have funds stolen. And a large portion of your trust funds are conveyancing matters, large property transactions where the funds are sitting in trust, and the attorneys are responsible for those. And we see an enormous amount of theft happening in this space. So just like commercial crime, it's the commercial crime for attorneys, and it is something that really we need to be talking to our clients a lot more about, because it's actually not sufficient in this space just to have a PR policy or a crime policy in place, but there is real importance here for them having risk management processes in place to avoid it altogether. And then something that has become a really big claim trend that we've seen probably in the last 18 months to 2 years is impersonation fraud. So what we see here is an attorney receiving an email from a client changing his banking details. The attorney goes ahead, he simply changes the banking details and makes payment without doing any verification that those details are in fact correct or even actually come from their client. And we've seen an enormous amount of claims from this space. It's just too easy. And unfortunately, it is almost bordering on gross negligence at this point that any attorney does not properly verify the details and information coming in with and from his client. So what's important here to have the conversation with your client?
Sorry, everyone. We seem to be losing Meggyn a little bit. Let's just give her a minute, and I'm sure she'll be back on. Megs, we lost you a bit there.
Sorry, guys. I don't know what is happening today. It keeps kicking me out. But I'm glad you're all there.
We're all still here?
Great. Sorry, guys. So in terms of, I'm going to just backtrack a second, just talking about impersonation fraud. These are specifically what we see in this space very basically is attorneys getting emails from their clients changing banking details. It's that simple. And it doesn't actually matter how this happens. It can happen that the client, and more prevalently it's the client's email accounts that are hacked, an email is sent from that account, or else the client's email account is spoofed. So it simply appears to be the client's email address. He changes banking details, money is then transferred into the changed banking details, and it is only discovered afterwards that in fact it was some fraudster who got involved in the transaction, who was aware of the timing of the transaction, intercepted that communication and gave the changed banking details for his own. And of course, when you go and investigate it, that bank account is closed and emptied. It's an incredibly big stress area for us because we're seeing an enormous amount of claims in this space, and it is something that is so very easy to actually avoid. It is required now that your attorneys all have verification processes in place, and so important for their own risk management. What sort of verification are they doing to ensure that when a client is changing information, particularly banking information, what sort of verification is happening? And it's really important as well that legal professionals understand that they also have a responsibility in terms of FICA and knowing your client, because it's also important for them to avoid any sort of money laundering that might be happening, etc. They are required to know their client. And so when and if their client does change information, it is important to understand how they verified that. We don't prescribe verification processes. We have some suggestions and recommendations, and these come through when you request a quote. However, a very important conversation again to have with your client to understand how are they managing this risk. I think it's also important to have this conversation with clients so that they understand that just because it hasn't happened to them yet doesn't mean that it won't. And I think if you've ever listened to Ryan talk, it's also important to understand that in terms of cyber risk, it's not always the big fish that people go after, because they invariably do have processes as well as safety protocols and firewalls, etc., to guard against these sorts of things. The guys that they do go after are the small to medium-sized firms that are less inclined to have good process in place and more inclined to be under the pressure to simply make transfers where they are in place. So very important if you have a small to medium-sized firm as well as a client that you have this conversation with them and highlight it to them. There's been a whole lot of media attention around this, a number of attorneys that have been taken to task on this matter because they're refusing to refund the amounts to the client because they are saying they themselves were duped by this and it wasn't negligence on their part. But in fact, to not verify information of your client is in fact a negligent act, and it is a commercial crime that is happening. So very important, again, some of these things to have conversations with your clients about, because I think that it is something that is very much in their wheelhouse, something they'll be familiar with, and something you're bringing to their attention to make sure that they are covering all their bases. Ultimately, it's great to have an insurance policy in place as a backup, but I think once you get to actually claiming, the loss is far bigger. You have a reputational risk that you've lost. You obviously have clients who have a trust issue now in an environment, and particularly a profession where trust is so important. So really important to go and have some of those conversations, but that is your background in terms of the legal profession. The other profession I'm going to talk about today is that built environment. So a very big space for us. We have a huge construction sector within our country. However, we have a construction sector that is under enormous pressure at the moment. I don't think I could name a construction company itself who isn't currently in business rescue or going through a liquidation. So that puts a lot of knock-on impact and pressure onto our built environment professionals. Not to mention the fact that we have a huge brain drain and a lot of professionals leaving the country to go and find work elsewhere. So this in particular is not only a huge opportunity for us to be talking to these professionals, but equally a very high pressure environment. So in terms of the built environment, there are various built environment councils controlling each of the various professions, ranging from the architects to the engineering council, etc. So every single profession in the space has their own council. Many of them also then, as a knock-on, have got voluntary associations that they belong to. Those associations promote certain codes of conduct, they promote certain risk management and quality management to their members, and some of them have got special insurance products in place and some don't. But what's important here is for really in this space to understand that there is no insurance dictated by a statutory body. It is not a requirement in the built environment by law to have insurance in place. Most of these requirements are brought around by contractual arrangements. They are usually required by consultants, actual clients, and for the contracts themselves. So important to understand the legal framework around these guys because it is very, very heavily contract based. I think what's important here though is, again, for yourself as a broker to become a little bit more familiar with the various types of contracts that are available for built environment professionals. Within the engineering space, they have several standard forms of agreement, most often used. And for example, the Architects Association has a standard form of agreement for their members. So all of them have their terms and conditions. And it's important just to understand the context of those, whether they exist or not, and most certainly whether or not your clients are making any use of them. Again, COVID. How is the built environment being impacted by COVID? So very different from the attorney space because practically, particularly through to level 4 lockdown, meant that all construction projects came to an abrupt halt. Huge amount of cost involved, huge amount of sitting time, but that was the reality of our situation with COVID. Many professionals may have been able to continue to work on design work or advice pieces, reports that they were working on, but any physical construction came to a halt. And so important to have a conversation again here with your clients about what sort of impact that had on their business, but more importantly, how were they handling it? What was their communication with their client and how were they managing having that conversation with their clients? So the risk management we're going to talk about in a minute, very important in the engineering space. Particularly when we come to COVID, and I think the question for you may always be, how will claims be impacted by COVID? And particularly with insurers like ourselves, and as various insurers' reinsurance treaties come up for renewal, I'm sure you will see this more and more if you haven't already, is your COVID exclusion under the policy itself. It's very important to understand that the likelihood, and please, this is my opinion, the practice of this, we have no idea. We have never had precedent of this. And so this, at this stage, is a lot of speculation on how we feel this may play out. But in terms of anything that happened during lockdown and a failure of any built environment professional to provide services, we really believe that the lockdown situation, COVID itself, is and could be seen as an act of God within their contracting environment. And so any failure to provide service may be relevant and it may be true, but they have the defense that in fact it was an act of God that has prevented them from providing their services. It is not the delay of providing services that brought construction to a halt. It was in fact government and their reaction to the COVID epidemic. So I think our claims and our legal environment is going to be super interesting over the coming year, even probably longer, to understand how COVID unpacks within the space and how it has impacted the delivery of services and advice from the built environment professionals. Very often, built environment professionals' risks, as I said, come from a contracting space. And this is why for you as a broker, it's important to understand what that contracting framework looks like. Modified, morphed, and added to by the way in which consultants are engaged. So it's not always as simple as a consultant being engaged by a client in a straight and direct provision of service in a service level agreement or a contract. Sometimes he's also entering into a joint venture contract. He's having to go into joint venture with other consulting partners to be able to deliver the services that the ultimate client is requiring. Very often, this is a requirement of the client themselves because they do not have the resources to manage multiple consultants and multiple contracts, so that may require your consultant to enter into a joint venture for a full turnkey solution, for example. Also, what is happening sometimes is that you're also seeing the consultant entering into contracts to provide services that they may not have all of the in-house expertise to provide, in which case they invariably would subcontract this work out. And it's important to understand how the liability flows onto those subcontractors and where the liability sits ultimately if a claim arises as a result of something the subcontractor has done wrong. So again, another conversation point for you with the client. You may very well be sitting in a position where you're talking about the commercial issues of a client, how they conduct their business, what are their commercial arrangements, their public liability, their assets cover. But how do you break into that conversation about PI cover without sounding like you're just trying to sell them another product? And really, the best way I've always found to have these conversations is to start talking about risk management and not to be talking about insurance policies. And so really here, it's to start talking to your client about how do you contract with your clients? Do you enter into joint venture agreements, and how do you cover those? How are you responsible for the liabilities that flow from a JV partner? How are you covering yourself there? Same with subcontracting. So these elements, understanding some of the framework that your clients are operating in, can lead us into a space where we can have really good conversations with our clients about the risk management and the risks that they actually face. Because ultimately, if you are in a position where you are the trusted advisor, where you are coming to them with some thought around their risks, it adds so much more value to them and makes you so much more valuable to your clients. Some of the claims trends, and this may seem crazy because we're not talking specifically about slabs, concrete slabs being a risk, or design elements in structural failures. Those are all over the place. We see so much of that. But when we really pull back and we have a look at the overall picture of claims, it is a surprising trend that in fact communication is the cause of a claim, or lack thereof, shall I say. So what we've seen as a huge trend within the built environment is the poor communication between a client and the consultant often is what results in a claim, not necessarily any technical failures of the professional themselves. I don't feel in this country at all that we have a technical failing within the built environment. We have highly specialized and expert people within the built environment, but not necessarily people that have found a way to be really good at communicating something that they're good at, but not necessarily their clients. So communication is essential. We find this in the claim situation all the time, and a huge part of this is the consultants managing their clients' expectations. A client has no idea how to build a building. He just knows he needs an office block. It's really to the professional to be managing the expectation of how that happens, as well as any changes that come up. So super important to actually understand how vital communication is. And I would hazard to say that communication is important in any profession. And we see this even in the broking environment. You know that communicating with your client, giving them that advice and having those records is extremely important in your space as well. So I think something that is definitely a trend across any profession. As a claim trend, however, structural and civil engineering remains our highest area of claims and much higher risk. And so you will see if you have several engineering firms, for example, on your books, that a civil and structural firm would pay a far higher rate for their PI insurance than, say, electrical, mechanical, and environmental consultants, etc. The structural space, unfortunately, we have definitely seen an increase in the number of claims made, but the quantums have started to climb. And some of the higher sort of figures that we've started to see of any single claims run into the 50, 60 million. Sometimes, and very often, in fact, the huge amount of money spent on these claims is actually in legal costs, more than it is the damages amount itself. We have seen arbitrations run into 80 to 100 million rands just in legal fees. So really important to understand that environment, the contracting environment, and how quickly we can resolve issues here. But around 80% of claims sit within the structural civil environment. So important to remember that when you're talking to a structural civil engineer, is to understand that that is a high risk guy and you need to have very specific conversations with him. So to quote one of my favorites, good old Lord of the Rings, J.R.R. Tolkien, it does not do to leave a live dragon out of your calculations if you live near one. And what I mean by that is what we have to talk about with our clients is risk management. Risk management is incredibly important. Insurance is just one small part of that risk management. And so some of the elements here that I've noted are a couple of the things that would apply no matter what profession your client sits in. These are all talking points for you to take back to the client and talk to them about these issues. Because if they are lacking in any of these issues, they definitely have a risk that they need to be addressing. And you bringing it to their attention adds value to them. So first and foremost, for any professional, there should be a written agreement. In the case of attorneys, it should be a mandate, and this should be in writing and signed. It needs to be very clear, because very often the argument with attorneys is what in fact was your mandate? What were you instructed to do, as opposed to what you did actually do? And very often only the written mandate can give us that guidance and indication as to what was agreed. This doesn't always need to be a 60-page thick document that you could kill someone with. A written agreement can be a few pages long and still be as effective as a very heavy book of signed documents that come from a legal team at the most expensive attorney firm. So it's incredibly important to have this conversation with your client. What and do they have written agreements? Sometimes it can be something as simple as what do their terms and conditions look like? They don't have to have huge significant agreements in place. Do they have terms and conditions that set out their risk in their quotations, in their invoicing? It doesn't have to be a complicated matter, but it does need to be there. So talk to them about how they manage in contract the risk and liability that they have, because it's the only place where they can manage it. Within those agreements, do they limit their liability? Now, you may find if you're talking to a law firm that they are less inclined to limit their liability purely because of perception. It doesn't create a good perception for them in their industry to have a limitation of liability. It doesn't mean that it can't be done. You will find limitation of liability far more prevalent in the built environment, where the built environment have standard terms and conditions, and they limit their liabilities not only in quantum, but in time. How far into the future can someone claim from me, and how much can they claim? How else do you manage your risk, and how do you place an insurance policy if you have no idea what your risk is, how much you could be liable for, and for how long into the future? So this particular point within the written agreements really helps and guides you when you start to ask how much insurance should I be taking out. and how far into the future should my risk possibly impact me. Another good risk management tip here is comprehensive notes. You wouldn't believe how often we have to heavily rely on the notes provided by professionals that they have taken, not necessarily notes that have been conveyed to a client in a formal process or formal way, but simply notes that they have taken of processes. The amount of times we have used engineers' diaries because they are quite good at, I suppose, or something that really has become a practice for many engineers, to keep notes in their diaries of things that happen on site, of things that happen in meetings, of conversations, of little elements of notes they need to take, where we have relied on those notes in a claim stance to actually understand what might have happened. Because the recall of anybody years after the fact and years after they've actually conducted their work is always a bit hazy. And those notes have been amazing in trying to recollect what happened at the time when the work was being done. So notes are important no matter what profession you're in. Using experienced expertise. Very often professionals are sitting in a pressured situation where they don't necessarily have expertise and they grab the closest guy they can get to get the job done. Ultimately, it's incredibly important for them to make sure that anybody, especially those that they don't necessarily have oversight of, but are giving work to, that they are liable for, are sufficiently qualified to do that work and experienced to carry it out to avoid any claims. Keeping copies of correspondence, filing and documentation and records just are so fundamental to any professional environment, no matter the profession. But where we really see this coming out and playing out is in the claims environment, because it's usually a case of whoever has the most records and the most documents wins. You have the best version of things, you have a complete record of things, and you are far more easy to defend when you have all of the information at hand. So super important across all professions. Of course, I suppose the question you always get asked is, do we have sufficient PI cover in place? And what is sufficient? It's a tough question and not something that we can answer.
Can you hear me?
With a definite, hi, I can hear you. So a couple of things when your client asks you about how much insurance they should take out. Also not something good for you as a broker to ever actually answer definitively. There are a couple of things, however, you can express to your client that they can think about. And these are a couple of those. One, how big is the business? What is the size of their business at that time? Another thing, what is the size of their contracts? How big are the projects that they are working on? Linked to that, what is the contractual requirement that they may have? What are their clients requesting of them? Because very often this guides how much insurance professionals take out. And many of them only take it out because it is contractually required. So what sort of contractual requirements do they have? And within that contract, not just to look at the insurance requirement, but what is, and if there is, a limitation of liability. Very important for yourself as a broker to understand and always remember and share this with your clients, the very big difference between a limit of liability and a limit of indemnity. Limit of indemnity is the amount of insurance required by the client in the contract. For example, he could say he wants 10 million rand at least for this project. That is not a limitation of liability. It is simply an insurance requirement. There must also be a limitation of liability in terms of what is the cap that the client puts in place to make sure that they cannot claim any more than that amount. And sometimes they are the same. Sometimes they say the limit of indemnity required is 10 million, for example, and the limit of liability will also be 10 million. So important to understand those and the distinction between those two. And very often, if there is an insurance requirement, that is not automatically equal to a limitation of liability. If the client asks for 10 million rands worth of cover, you can be sure that if he has a 20 million rand loss, he's still going to claim from the consultant for that full amount. The consultant may just find himself underinsured. So very important to have that limitation of liability conversation with your clients. And then, of course, it all comes down to affordability. would always recommend that clients take out the most insurance that they can afford at that time. It is always an economic question, and it always has to be part of that conversation. But those are a couple of the factors that you can take into account and share with your client when he is trying to decide how much PI insurance does he actually need. A couple more specific things. If we have a look at the attorneys, they can make use of the prescription alert service through the LPWIF. That is available to all attorneys there. So that really helps a huge amount with one of the biggest risk areas for attorneys. And then also important, as I mentioned to you, the LPWIF, for example, as a primary layer for attorneys, has certain exclusions. And it's to have a conversation with your clients about how they're risk managing around the elements of risk that are not covered by the LPWIF, and do they have the correct policies in place to help them respond to any of those risks. So that's just some of the risk management that you can have a conversation with your client without being a risk manager yourself. It's simply important for us to delve into the world of the client and understand the context that he operates in so that we can give better advice around risk management and what products best suit him. Then something else I just is a couple of top tips from us as underwriters. I think it's so important and so often overlooked. I hope I'm still connected with you and I haven't shut off here. Very important for you to understand your role in the presentation of your client to underwriters. I think so often brokers have been placed in this space of a bit of a post box. And I think sometimes because we are unfamiliar with the product itself, we just know that the client needs it very generally, and we're uncomfortable having the conversations around PI insurance itself. But it's important for us to get involved. So, number one, give yourself time to know your client and know your market. We will send out renewal invitations, typically 6 to 8 weeks prior to a renewal. And equally, even if you have some new business coming in, take the time to get to know your client. Yes, we give you a form to complete. And that is only the tip of the iceberg when we start to underwrite and actually have a look at risks. When we have a look at that, and very important for you to know, is the impression created by the information and the way in which you provide information to underwriters. So understand the impression that is created. Does your client complete the form for us? I'm a little bit concerned about any client who is looking for risk cover but is unable to fully complete a proposal form to give us all the information about him. I worry that this isn't very important to him. Some of that information, when we talk about our proposal forms, that is very important to us that we look at. Obviously, the fee and income is always very important when we are addressing a professional that needs PI cover, because we use fee income to calculate premium. But that's just a start factor. We look at their risk profile, we look at their claims history, we look at their experience and qualification. So I'm always a bit nervous about, let's say, somebody who graduated 4 years ago has opened up his own firm and he's working on his own. He hasn't got any peer review in place. He doesn't have anybody more experienced to bounce ideas off of in his firm, and that creates a concern for us. So important to understand the experience and the qualification behind all of our professionals as well. Oversight and peer review is very important, and we can see this from looking at the staff complement and the principle involved in a professional environment. We have a look at risk management where we can. We ask some risk management questions, but so important now that you have a couple of points to go and chat to your clients about in terms of risk management is for a good risk management presentation to insurers so that we can make sure that we are seeing the full picture of the risk of a particular client. So we would have a look at, does he have risk management processes in place? Does he have quality management systems? Is he ISO compliant? Does he have agreements in place and service level agreements with his clients? All of that information is extremely important to us. And if your clients have that and you have access to the same, share that with us. because it creates a better impression for us of your client, and of course impacts the risk that we're willing, number one, willing to take on, but number two, how we rate and price that risk. Then we also go into cross-referencing with their websites. We look at their online presence. So for yourself as a broker as well, and I know that you are just inundated and none of us have time for any of this, but we have to make the time. Go and have a look at your clients' websites, because very often what they say they do in their forms is very different from what they say they do on their websites. So it's important to understand, because there may be elements of risk indicated in the services provided on their website that we are not covering or are not aware of, and we miss something. So really important for us to cross-reference all of that. So understand, really important for us, is that impression created of your client, particularly if it's a new client. We want to know that your client is taking risk as seriously as we do. And so in line with that is to demonstrate the insured's risk management, if any. And if they have no risk management, that's the conversation you need to be having with them as their broker, to understand why they would simply be wanting to rely on insurance instead of making sure they don't have the claim in the first place. And that's our top tips for today. That's how we see a bit of risk management to go and talk to your clients about. A couple of professions we've touched on. Of course, there are so many more, and we are always happy to talk to you, answer any questions you have, unpack a few more things, and we are always available for that. So please make sure that you ask us any questions. Please book your PR product training with us. We are happy to do that, and it's so much quicker and easier now over these sorts of platforms that we have available. And most important, get a quote today. Thank you so much, everybody. Shall we have some questions?
Yes, Megan, thank you very much for a really good presentation. And I often judge a great presentation by the number of questions that we get afterwards. And if that's the measure, then you've done a fantastic job, because we've got lots and lots of really good questions. So I know that some of you may want to leave. So if you do have to, no problem. But I think some of good learning will come from all of the good questions that we're getting. We will document the questions and the answers, and we will circulate them to all of you that have attended. So if you do have to leave, we will make sure we send you the questions. But great if you can listen to a couple of the questions. And I definitely think people want wine, because we've had lots of really good ones. Megan,
I think we timed it well, Justin, with the shutdown and the ban on alcohol since yesterday.
Yes, and we even have Steve van Roritz, one of our competitors at Leopard, listening and asking some great questions. So Steve, I hope you're learning from the experts, and actually good to have you with us. And thanks for what you do for the UMAs and for our industry. But great to have you with us. So Megan, a couple of questions. I'm going to, wow, there's so many. So question from Margie Ellison. Do you limit cover for misappropriation of trust funds, or would you consider giving cover up to the client's trust funds requirements?
So Margie, misappropriation of trust funds, where we add it in and package it in with PI insurance, it usually is sublimited. Mostly this is around pricing. Often there's a concern around pricing for a insured. But we do have firms with up to 250, 300 million trust money cover. So it does depend on the firm size, but absolutely those limits do range, and we can accommodate that.
Perfect. Then Megan, we've got a great one from John Kirby in Cape Town. And John has been a regular listener of ours. So John, thanks for your support. And he says, how does one determine the necessity for a PI extension under a product liability cover for machinery that is sold or fitted for customers, but without a specific charge for advice?
Okay, John, great question, because I think this also spans across the level of all tradesmen. So we often have a request for PI cover for tradesmen, whether it's a plumber, an electrician, somebody in this space where their advice, the service and advice portion that they are offering is in fact linked to the broader service of providing a manufactured product in that space. So in terms of our view on it, and the way we've handled it up until this point, and possibly the market is moving away from this, but tradesmen and their PI exposure is incidental incidental to the work and service they actually provide. And this is often indicated by the fact that they don't charge for that advice. It's part and parcel of the product they're providing. And particularly you see this where they also manufacture products. So in this sense, the best response is usually that they would take out their general liability policy they usually would have in place anyway, and they would add an errors and omissions extension. So it's incidental errors and omissions. It would cover the advice portion that they do, and that would be sufficient to cover any PI exposure they have for or related to the product they're actually providing. We may be moving away in our space to a time where we need to offer PI for tradesmen because we're seeing the requests coming in a lot more, and I think a lot of that is from client requests. Their actual clients are wanting them to have PI, particularly if they're working on large projects. But yeah, for now, it's generally accommodated under a GL, but if we have to, we can issue a PI policy for that as well. I hope that answered your question.
Great, Meggyn. I'm going to keep firing because there are so many good questions. Here is from Shane Goslet, and Shane asks, can you provide clarification around prescription? Shane's understanding is that it's 3 years, but if the incident leading up to the loss only manifests after 3 years, does the third party have a legal leg to stand on, or does the prescription period stand?
So, Prescription Act states that the party who is harmed has 3 years from the time they become aware of the claim to institute action, and if they don't do so, they lose their right to that action. The tricky part with that is, when does he become aware of a claim? If he only suffers harm in 10 years after the project has been completed, he then has 3 years from that.
We lost you a little bit there, Meggyn. Could you just repeat that last sentence?
Sure. So prescription specifically states around when do we become aware of the claim. That is what triggers the starting of the timing for 3 years. So we would ask ourselves, when do they become aware of a claim? If that's only in 10 years' time, prescription would only start to run from that time. So it would now be 13 years after the project. That is where the contract becomes very important, and the limitation of liability in terms of time, because there you would state that my liability is limited to 5 years after the project completion. After that time period, nobody can claim from you anymore. But if you don't have that in place, then the Prescription Act, in fact, comes into play. So putting limitation in your contract can override the Prescription Act as it sits out in law. Okay.
Cool, thanks, Meggyn. Here we have a question from Steve van Roritz. And Steve says, when is a circumstance that may give rise to a claim and notifiable circumstances in terms of a PR policy? What then is a competent circumstance? So thank you, Steve.
Thanks, Steve, for throwing that in there, just my curveballs for the day. Steve, I think that every insurer, as you know, would respond to this a little bit differently. And so please tell me if I'm not answering your question here. But I think the question is around when do we notify? You know, when is it legitimate to notify? And I think in every circumstance, particularly we're talking now also across different professions, it becomes very difficult to draw a line in the sand to know when something is notifiable and when is not. So for the brokers listening, what's really important is for us to offer the best advice to our clients. And the best advice is really to notify any circumstance where you have, number one, your own concerns around the quality or the level of service provided to your clients. So if there is a concern, if you've had a challenging conversation with your client that the client has just said in a meeting that he may hold you liable, that's a good time to start getting your ducks in a row, because you may very well have a notification down the line. So it's not as simple as only if you get a letter of demand or a summons do you have to notify, because very often matters start long before that. What is key for us specifically around notification is around prejudice to the insurers. So our question is always, in terms of notifications, and especially if we're assessing late notification of matters, is around the reasonableness of prejudice to the insurers. Were we prejudiced by you not telling us sooner about a matter you were aware of? Yes or no? It's a relatively straightforward question. So that's sort of our guidance around that. So I don't think it's as easy as saying, well, Under XYZ circumstances, you notify. Under ABC, you don't. I would always take the prudent approach and make sure that I notify. Worst case scenario, the matter goes away, everybody closes their files, and it never happened. But a prudent approach is always far better than sitting with a late notification issue down the line. I hope I answered that for you, Steve, but jump back on if I haven't.
Great stuff. And then, Meggyn, we've got some really good questions around COVID and our COVID exclusion, and in particular around the FSCA decisions around active guard and this recent Cafe Chameleon decision that's been in the news.
Yeah.
And certainly the COVID exclusion is a moving target for many insurers, and we've seen as I2 ourselves that a lot of these COVID blanket exclusions are being forced on to all insurers and UMAs by our reinsurance markets. And we certainly see that there's a trend of excluding COVID-19 and communicable diseases. But Meggyn, do you want to talk a little bit about COVID-19 and our approach at the moment, which is a moving and changing approach, and also maybe your views on active guard compared to the Cafe Chameleon decision? And that's from a couple of people who asked questions around that.
Yeah. So in terms of COVID, and when we think through practically how this might play out in the PI environment, again, I'm going to have a caveat here that we have no idea how this is going to play out. We have no precedent for it. We can really only imagine. But when I think about how the exclusion that we've started to see coming through from the overseas markets, from reinsurers, when we look at an absolute exclusion, how will this impact the services provided by a professional? So let's take an example. An engineer doesn't provide drawings on time during lockdown. It impacts the actual project. The project is delayed further because once lockdown went into a lower level, the drawings were still not available. And ultimately he says, no, it was because of COVID. Well, the reality is that can COVID itself cause a lack of service provision? That's going to be questioned. And up until the point that we can answer that question, your policy is still going to respond to the allegation of negligence. So where and when this COVID exclusion actually triggers is going to be interesting, because it's never going to be named as the reason for a claim right up front. It's going to come into play later down once you start to investigate the matter and understand at what point and why did somebody not provide the services that were expected of them. So, and at that point, even if the reason for not providing the services is because you were in lockdown and for whatever reason you couldn't provide those services, the reason and the rationale around that being COVID or being lockdown would then come down to, yes, I was possibly negligent or I was possibly late with my drawings, but I have a good defense. So COVID, lockdown, the exclusions doesn't change the fact that a client is going to sue you. What it is going to change is how you have a defense for the lack of service provision or the lack of advice or the lack of reports being submitted on time, whatever that alleged error or omission might be. And you're going to have that COVID exclusion come in there. However, because you have a defense, because it is an act of God, something beyond your control and beyond either party's control, I think it would be really interesting to see how either party would want to hold lockdown or COVID against the other as an excuse or as a claim scenario for lack of service provision. So, as I say, we have no precedent and we don't know how this is going to play out. Every lawyer is going to come with an amazing way to argue this for and against. And we're going to see that play out in the courts. But for me, I have in the PI space, I am not as, let's say, freaked out by the absolute COVID exclusion as you might find in other products where it is a real problem. Events liability and D&O, is a real worry. But in the PI space, I just see it playing out very differently because I can't see COVID and lockdown causing errors and omissions. And if they do, it could still be seen as an act of God. So the legal framework is going to be real interesting from an argument perspective going forward.
Great stuff. And we have had some great comments on the chats as well. So please have a look on the chat, and there's some good comments and discussion around this. Meggyn, how are you doing for time? We've still got
I'm fine. So if everybody else is happy, I'm here. If you need to go, you can go. We can answer questions till the cows come home. So if not, I will go through the questions as well, and just I can also just message, I think, on this group chat still, and answer some of those as well. But it is recorded, so guys, you can go back, just watch the end, and see the rest of the questions answered if you'd like to stay. But you can go if you need to.
Perfect. So let's give it 5 more minutes and answer a few more. But what we will say to everyone is that we will document all the questions, we will answer them, and we will circulate it and send it out to you. So thanks very much for the great questions. So we've got a good question here from Romy Nomus, and she says, in the media industry, we often get requests for errors and omissions cover, especially when distributed internationally. What would you suggest for producers if it's a per project and not an annual cover they seek? And it seems there's not much available in South Africa for this type of cover.
Yeah. So, so Romy, hi, nice to hear from you. We have quite a bit of media, general PR that we do in the media space, probably a little bit more in the multimedia space, advertising space, etc. So we can 100% talk to you a little bit about that. We can maybe take that offline to speak specifically about what we can provide there. The challenge we would have is we don't provide it on a project-to-project basis, which is obviously a challenge because of how the media industry actually operates and sets things up, and a cost transfer perspective for the premium. But I'm sure that we could work out on something annually, and we could talk to that and find a solution for that if we need to.
Great stuff. Thanks, Meggyn. Okay, let's just see.
So just Nolene had a question here, a little bit more about the prescription. So just remember, prescription applies to any relationship, any parties. If you have a contract limiting liability, it is only between the contracting parties. It doesn't bind third parties outside of that agreement. The Prescription Act would then apply there. The only time that you can manage the risk that you or the person as a professional has to the client and to third parties is if they agree to an indemnity clause in their agreement with their client. It would be a third party indemnity. So essentially the client would step into the shoes. If anything outside of the limitation of liability occurs, the client would then be liable to that third party. Again, that's got to be in the contract. So you're quite right, Prescription Act would apply to any party outside the contracting environment.
Meggyn, we've got a question here from Helen King. So hello, Helen from Durban. And she said, could you elaborate on professional indemnity for insurance assessors and surveyors?
Yes. I'm not sure what you're asking, but yes, we do cover them. We don't mind them. They are usually very specific, relatively low risk. We don't see an enormous amount of claims coming out of the assessor environment. And there are certain parameters for the assessment space, but definitely we have a relatively good, healthy book of assessors and the like.
Great stuff. Meggyn, you shoot at the questions you can see that I've missed.
Well, somebody asked me about a breastfeeding consultant. I tell you, we get all the questions. So a breastfeeding
and we hope you're not going to do a demonstration, Meggyn.
No, that's not my area of expertise. I've been there, done this. But breastfeeding consultants would possibly almost fall more into the medical malpractice space because it's medical related advice. So 100% you'd probably find this in our MedMal space, and we can refer you across to Fia, and she can happily have a look at that. And because it's largely MedMal, even the advice portion, we can add on a bit of a PI element for any advice related elements, but it is much more in the medical space.
And we would cover it, so send it to us. And then Meggyn got a question from Lauren Anderson, which I think is a really good one. And we speak a lot about IT, about packaging these products. So we've touched on cyber, commercial crime, and R2 obviously sell these as well. When would each policy be used, and when would they overlap? And can we sell them as one policy? So Lauren, that's a really good question.
Okay. So very basically, not to give you a product demonstration, but essentially what is vital in all of them is to look at what actually causes the claim. What is triggered that has resulted in a third-party claim from the individual. So in a PI sense, you would have had a professional relationship, you have not delivered on the professional aspect of your job, and that has triggered the PI policy. If the claim, however, has come in because your system has been attacked, and that individual, you know, depending on what they've gone and done, they've actually attacked your system, and through your system, they've gone and caused harm to a third party. You would have that cyber liability coming in now because you need the first party access to a cyber risk and you need the third party liability element. So you've got that overlap. So the trigger there is a cyber event. I'm going to call them, Ryan's probably going to shoot me, but I'm going to call them cyber events that would trigger specifically a cyber policy. And then of course, commercial crime is theft of money. So where these three sometimes overlap is in exactly that, I was talking about impersonation fraud. So you have an individual, attorney, he receives an email from his client changing banking details. He fails to verify that email. The client's email account was what was hacked. So there was no fault on the part, there was no system, what's the word I'm looking for? There was no system issue on the attorney side, it was the client side. But nonetheless, the attorney acted on the instruction without verification. That is a PI claim / misappropriation of trust money because the attorney was negligent in not verifying the information he received. However, same outcome, money is stolen or money is transferred, but the attorney's system was hacked and therefore money transferred and stolen out. Now you've got a cyber risk, and then depending on which account in fact was hacked, was it the business account or was it the trust money account, will depend on whether misappropriation of trust money responds or whether a fidelity guarantee policy responds. So the net outcome can be the same, but depending on how it happened and what happened to make it so, will dictate which policy actually responds to that kind of event. Clear as mud. See? Easy.
Great stuff. I think, Meggyn, I'll maybe pick one more question and you pick one more and then let's wrap it up. Cool. We will judge with our panel and decide who deserves a bottle of wine. And yes, Stephen Roritz, you've asked so many questions and even asked for the bottle of wine. So we will definitely give you a bottle of wine to say thanks for listening to an R2 presentation. It's good to have you with us. And everyone else, we will make sure that we answer all of your questions. It's really, really good to see so many questions asked. And also, we'll put Meggyn's email and contact details on the chat as well. So if you do want to get hold of her, some of you are asking about very specific clients. Meggyn is always available for a discussion on that. So Meggyn, my last question is from Marianne, and she says, in the built environment, would the PI policy pick up injury or death claims resulting from their subcontractors working at a client's premises?
Yes, so our policy, we do in fact extend to cover bodily injury and property damage as long as it was as a result of professional negligence. So you'll find probably a couple of PI policies out there that have an absolute exclusion for those things, but you know, then there's a very big gap in the potential risk that your client has. Ours is in place as long as it is as a result of professional negligence. It's not just an accident. So where it's accidental, you know, engineers on scaffolding, checking out something and doing some supervision work, and he kicks a brick off the scaffolding and hits somebody in the head, that's a public liability claim. It's not a PI claim. So it's the distinction sometimes is between those two. But if professional liability is flowed, an error in omission has caused the bodily injury or the property damage, your policy will respond.
Great. Meggyn, is there any last question you want to answer, or can we wrap up and send it to everyone?
Tamlin just wanted to know, if a client is a one-man attorney with no employees, does the verification process have to be written down? So we would ask for the verification process. The point of that is to make sure it is circulated to all people, which would be a bit pointless to an individual. So as long as he can demonstrate to us what that verification process was, He'll probably be asked that at proposal form stage, so we want to know what that's the process is. He doesn't have to demonstrate that everybody has been told, because he'd be talking to himself, so that's fine. But it's very important for us to know that there is one, because should he have a claim related to that and he can't show that he followed his process, he's going to have a challenge getting cover. So yes, very important. What a one-man attorney cannot get is misappropriation of trust funds. An individual who's buying the insurance cannot also claim from that type of insurance. So that's the one thing. If you have a one-man attorney, you can't get commercial crime cover. Right. Anything else, I will go through and have it, but please, you have my contact details. If not, go on the website. My details are there. Give me a call. Send us mails. We love answering weird and wonderful questions, giving it us some thought, and providing you guys with content. It's really, that's the fun part of our job. So please get hold of us and we'll help out. But please book your PR product training for your teams and get a quote today.
Thank you very much, Meggyn. I think this has been a really, really good session. And for me, I think the one point that I want to emphasize, so many times brokers see PIs as really a volume type of business where they make decisions really on price. And Meggyn, I'm sure you will agree that so many times we quote and someone else gets a cheaper price. But I think all of these questions really illustrate that PI is actually a really technical class of business, and not every policy wording is the same.
Yep.
So I think it's really important that you have a discussion with R2 underwriting experts, understand the cover that you're getting, and we are there ready to help and support you. And we really say to you that with R2, you have an expert by your side. So thank you very much for listening. We will circulate Meggyn's contact details. We will answer more of the questions that we haven't answered. And a big thank you to Meggyn for being an expert and for doing R2 proud today.
Thanks, everybody. Bye.
Bye, guys. Shout out as you're leaving.
Bye, everyone.
Bye. Thank you.
Bye, guys.
Cheers, Justin.
Bye.
Thanks a lot. Cheers, Meggyn.
Cheers,
Bye.
Kerry. Nice beard.
Bye, everyone.
Bye.
Looking good.
It was great. Thanks, guys.
Thanks. Bye.